Good morning, everyone, and welcome back to the most random live stream on the planet with myself and the ex-favorite co-host, Jose. How are you?
I'm pretty good, Neil. And if I'm the ex-favorite, who's the new favorite?
There's no new. That's the
Okay.
thing. There is no new. We are back. We're going to talk about some stocks today. Seems like we're having actually quite a good day so far, so we're not going to jinx it. But
It's Jinx.
yeah.
Good game. Us doing it back together. Either it's the turnaround story, or it's the end.
The top.
Yeah. One or the other.
Yeah. I mean, the last time actually it wasn't that long ago with the Coreweave earnings report with Tanner. Coreweave then crashed 18%.
I blame Tanner.
Yeah, that's actually his fault. But
it's because he was making fun of you for Duolingo, and I'm like, I don't want that energy. We don't need that energy, and it's all Tanner's fault.
Yeah, I mean, he wanted a good entry point. Hopefully, he took that opportunity to get into Coreweave or not. But yeah, since then, I mean, the market, of course, has been all over the place. But I think most people were surprised this week by the reaction of the market, especially today. Today, we're green. Actually, maybe I can show this right here. We are green.
What is this color green you're talking about?
A lot of these tech names here, green across the board. If we go and look at maybe the neo cloud players, I mean, Coreweave is up 7.6. Hut 8,
Nebius
14.
I saw was up nice, 8.5, and Iren was also up 11. Yeah, crazy.
Semiconductors, I think most of them, all of them are green as well. Nvidia,
like 2 or 3%, yeah.
Now 1.7. You need to pump it up a little bit. But yeah, what's been on your mind, AI semiconductor wise, right now?
That the market is stupid. That's the only thing. It's I mean, obviously, I understand this. It's the market. It's crazy. Every time there's a answer to a bearish thesis, obviously a new fear comes out. I think lately, there's been a few conferences happening after earnings, and one of the biggest concerns that it seems that at least these analysts have is like, is 2026 the peak of capex, right? And it's like, we just got capex for 2026. Like, it's only month 2. How far ahead do you? It's the market wants you to tell. The market wants to know 2026 capex. They want to know 2027 capex, and they want to know 2028 capex right now. And if you give them all 3 of those, Neil, they're going to want 2029 capex and 2030 capex, and they're going to want all those capex. So it's the market just wants to know how long this cycle is going to last, and no one's giving them an answer. Just saying 2026. They're getting the answers. 2026 is good, and we're still in early innings. But it's like, what more do you want, market? So yeah, that rant.
I mean, it's not really a rant, but it's not like we're paying 50 times earnings for an Nvidia.
Mm-hmm.
We are paying
22, I think, on non-updated. Did we lose Neil? Am I down? Who's down? Chat, let me know. Am I down or is Neil down? Let me know, chat.
Wait, what happened
Was I
here?
down or you down? Chat, let me know. Because Neil's
I
going
don't
to
know.
blame me. Neil's going to
I
blame
think
me. I can feel it. I can feel it.
you
But
can
was it
seal
me or
it.
was it him?
It
It
was
was Neil.
StreamYard.
Okay. It was.
It was
No,
me.
no, no. Everybody says it's Neil.
It was me. Okay, but we're back. I shut down the
Neil is actually an AI agent,
I shut
as
down
you
the
can
data
tell.
center. No, what we're saying, yeah, the paying the expensive multiple right now for an Nvidia, let's say Nvidia 24 times or something like that. Let's say the capex cycle tops in 2027. Okay, so what? It's still an insane amount of money. Like, we're
Yeah.
not going to go from
And at a crazy
600 billion
valuation,
to
like if
100.
yeah,
It's a strange environment. I guess I understand for some companies it doesn't make sense. Okay, what do you make of the fact that Nvidia is starting to be, people call it the Berkshire of tech, because they are investing. I think, yeah, every couple of months we see an investment in another couple of companies here and there. I think more recently was Cohere and something else, I
momentum.
believe. Yeah, I
And
mean
then they
the
did
investments.
synopsis a few months ago too. And obviously
Synopsys,
all
Coreweave, Nebius,
yeah,
Intel.
and all these AI private labs that they're doing that we don't hear about too much, minus the big players. Um, I mean, I think I don't know if I would call them the Berkshire of tech, of at least this AI ecosystem. I want to say more just the builder is what they're doing. I do think a lot of these investments, like for me, like for example, Berkshire, um, they're investing on these companies because they believe they're undervalued and they want to make money off of them, right? I think Nvidia, they do believe that these equities are going to be in assets, but I don't find that being like their main driver of doing this. I think the main driver is they really want to push in this ecosystem to grow even faster and faster. I think I talked about it in Tanner's show where it's like they want to, they don't want one player being the dominant player because then that it's just like Intel, right? Intel is the perfect example. Intel was the dominant player in the um, late 2000s and the early 2000 teens. And what ended up happening, they stopped innovating because they didn't have to, they didn't have a purpose to. So NVIDIA wants to make sure that this whole ecosystem, because the AI infrastructure doesn't just run on NVIDIA chips, it runs on the power, the electricity. So there needs to be innovation in the power. It runs on the memory players. So they have to make massive supply orders. It runs on optics. It runs on everything. So they want to make sure that all these players have incentives to continue to innovate at rapid levels. Um, I like what they're doing, but for me, it's more of like the end results, not the actual investments. I don't think I'm going to get much, especially being a $4 trillion company right now. I don't think I'm going to get much equity boost based on those investments, but it's more what that investment is doing to help the whole ecosystem grow. That's where the big money is going to be coming from.
Okay, no, fair enough. Because I mean, you could look at it from a perspective of, let's say, when the capex cycle tops and it slows down, etc., etc. Yes, Nvidia will still be selling GPUs. They're still making money from networking and all of that. But by then, all of these investments, all of these companies should start to generate a hell of a lot more revenue, profits. Nvidia makes, of course, money from that, because if they're successful, Nvidia's investment is successful, and it's one of their ways, I guess, to position themselves for the future. Look, we are extremely diversified right now. Even if the cycle reaches its peak, we've made our investments. These companies should now be growing, and we are going to benefit from that as well. Especially the huge investments in OpenAI or Anthropic or any of these other huge companies, which I think I've seen that Anthropic, they're expected, the revenue is at $20 billion or something
Yeah,
like that, which
it
is
was crazy.
yeah.
Because I heard 20 days ago it was like a $14 billion annual run rate, and 2 months ago it was at $9 billion run rate or something like that. So it was crazy, crazy. What do we have here?
Yeah, famous duo is back to see if we can hold up the market a little bit. A little bit. So far, so good.
Yeah, so far it's working. You're welcome. You're welcome, everybody. You see that some of that green? That's Neil and I. You're welcome. No appreciation either. No, thank you.
Yeah, I mean we've seen some. I think we talked about the AMD news last week, before the Coreweave one, or actually maybe during the Nvidia earnings. Can't really remember, because later tonight there is Broadcom. I don't know. Someone was asking. I don't think. I mean, I'm not going to stream it. Maybe you are. I don't know. Probably not. But yeah,
No,
what do you
not
think?
Broadcom.
Broadcom, probably a good quarter, no?
Yeah, I mean, definitely. I mean, TPUs are going like crazy, right? So I think and they're definitely moving along this direction. Good direction. We know a few more customers are expected to ramp throughout the upcoming 12 months, I believe. So I think what would the market love to see is I think Hawk Tan has given us some form of numbers of what to expect for the next few years, based on like selected customer. Has that number changed? Has it increased? Are more customers coming in? Like, I think that's the update we're going to hear. But at least for the financial results for this quarter and for guidance for next quarter, I think are going to be great. But like we see, the market, I think, doesn't care. I don't. It's funny. The market no longer cares about next quarter guidance. They care about guidance 3 years from now. Um, and if you don't give us a great guidance 3 years from now to the penny, then we're gonna sell off.
I mean, yeah, that has been the theme this earnings season, right? We've seen beats across the board, and then just stocks getting hammered left, right, and center. And of course, if you do miss, whether it's a small miss in revenue, a small miss in EPS, doesn't matter. You're going to get hit even further. I think C Limited reported yesterday, big beat on, big beat on revenue, miss on EPS. And yeah, the stock yesterday was down. Actually, it recovered. No, it was down 16.5%. It was down way more than that. So market is unforgiving at the moment, even with good results like the Nvidia ones. The Nvidia ones that was a joke.
Yeah,
They reported, stock went down
and
5%.
I wonder. It's like every time you also find like a new bearish thesis, right? And I think one of the new bearish thesis here for Broadcom is kind of like that AMD story with Meta, right? Where AMD is kind of designing a custom GPU. And I was just reading the transcript about it, and they mentioned that yeah, with this custom GPU, you're kind of getting kind of like 80 to 90% the economic benefits of an ASIC solution, but you're getting it at a faster time and in a structure where it's still a GPU system that you can kind of change and use over time. So I wonder if that starts to become a new story. If we start to get more custom GPU wins for AMD, which I think it's possible. Um, what does the optics look for Broadcom, right? And it's more about the optics. I'm not saying that it's going to be bad for Broadcom, because I think this market, Neil, is just so huge that we still just need massive demand from every player. But the optics are going to look horrible, and I wonder if that creates kind of like a bearish sentiment for Broadcom here on out.
Yeah, fair enough. I mean, and tomorrow there's Marvell, so whatever happens with Broadcom, Marvell takes probably the hit until they report 24 hours after that. Vitor's here asks, how long do data center chips usually last? Won't companies that buy them have to upgrade after a few years anyways? The answer to the second question is, of course, yes. All of them will have to upgrade anyway. So you could say that the upgrade cycle is going to last for, I don't know, until we're done with everything. How long do they usually last? Well, that's the whole discussion right now. Right? Some people say it's 4 years, 5 years, but as we can see right now, there are still some old GPUs that are getting monetized at the moment. Of course, the older the GPUs, the less efficient they are, and things like that. And the pricing, of course, has changed. But so far, it seems like you can buy a GPU from, what was it, 5 years, 4 years ago? 4 years, I think.
Which one,
And you
the
can
Hopper
still,
or the Ampere?
I mean, both of them, I guess.
Oh yeah. So four to I think to 4 and 6, 4 Hopper and 6, I think, or 3 Hopper and 6 Ampere.
Yeah, so far that's the case. I assume with the newer generations, it's going to be the same. Pricing, of course, will change along the way, but people have been saying, oh, after 3 years, you're going to make zero money on it. Well, clearly that's not the case today. But yeah, to the second part of the question, I mean, 5 years down the line, we might have the MI, I don't know, 900 and the Nvidia, I don't know what name they're going to give it. And yeah, the big
XYC
companies,
30, yeah.
yeah, they'll have to upgrade.
Yeah. And I would say for this, Neil, first thing, I think as long as companies can keep building new data centers, new real estate, I don't think there's going to be a reason to take a data center off and refit it for new solutions. So I think what first needs to happen is as we continue to build more data centers, it does seem like everybody's building data centers like crazy. So there's still going to be a chip constraint space, either being due to memory, either being due to advanced packaging, either being to wafer starts. Something creates, it's going to create a chip constraint. So you can't fit all these data centers with all these chips just yet. So at first that's going to happen. Eventually, maybe there's going to come a time where you can't build data centers. And then you go, okay, so I can't build new data centers. How can I retrofit my old data centers and maybe start to change them into the newer chips? Because eventually, you're going to start to see the A100s kind of start to leave. But Amazon did mention, I think on December, they had a conference and they were like, or January, they were like, we still haven't retired one A100 server just yet. So that's about 60-year system. Now, there is one difference compared to a lot of maybe a few years ago. At least with inference, these GPUs are running nonstop. Maybe back then, a GPU would run X amount an hour. We don't have at least that track record of what happens if these GPUs are running at like 90% utilization for 5 years straight. Does that change things as well? Obviously, I think Nvidia has and all these players have thought of that already. But it is something that we as a consumer or analyst haven't really gotten real world data of like 90 plus utilization for 5+ years. What ends up happening to that product?
Yeah, no, I agree. I mean, it feels like we've been talking about this for 10 years, but it's been just what, 3 years where things are really starting to move. So it's too early to actually make these types of conclusions. But yeah, by 2030, I assume we will be, I mean, analysts will be able to model these things way better. So we'll see. But right now, I just looked at the chart. I'm like, wow, this has been a pretty boring one for Nvidia. It's been flat for 7 months, basically. 7 months of nothing for
That's wild.
for a $4.4 trillion company or so that's growing 70% year over year. It's quite impressive. Of course, if we zoom out a little bit, it's still up significantly over the past 12 months, but over the past 7 months, Nvidia has done absolutely nothing. Where is Microsoft? This one is also crazy. Microsoft looks here like a shitco. We go up and that's like this is a roller coaster mountain or something.
It's wild, but I really do enjoy the Mag 7s right now. I don't want to say like it's like Google because it's completely different, but at least it's like I think there's the opportunity where they are going to be providing market returns over time. I feel like there's a undervaluation happening in a lot of the Mag 7s, not to the level that we saw with Google, but there's some where I think it's better than an overall market approach right now.
Yeah, no, I agree. I guess the only problem with these names, like an Amazon, for example, free cash flow margin right now is 1%. It could go to zero or maybe even negative over the next 12 months. Same for Alphabet, same for Meta. If you do like the DCF or whatever, you, of course, for the next year or so, free cash flow is going to go down substantially. And so it might look very expensive. But if we go back to the first conversation, if the capex cycle does peak in 2027, then all of these companies should go back to their usual, hopefully usual, if the return on investment is there, to their usual free cash flow margin profile. But for now, yes, a lot of these companies will look more expensive than before just because capex has increased by quite a lot and free cash flow takes a hit. And like you said, there is no real, oh, this is like Google of last year example right now, because Google of last year was purely a big disconnect.
Yeah. And with Amazon, right? I'm curious to know if a lot of these free cash flow projections are taking into account like things like the acquisition, Amazon, not acquisition, the investment Amazon is making on OpenAI. Um, they said at least the initial is $15 billion out of that 50 billion, but $15 billion. And again, we don't know if it's all going to be pure cash. Is it going to be based on Azure credits? On how are they giving it? Um, but if it is cash, it should also impact the free cash flow statement of the business. Um, so curious if analysts are already projecting. I know they're projecting that crazy capex, but are they projecting this investment? Are they going to make more investments in companies like Anthropic later on or other players? And that definitely could hit that free cash flow and create a fear for the AI space.
Yeah, but then again, if the valuation does go up, it pumps up their earnings per share.
Yeah,
But
that is true.
at the same time, the deal with OpenAI, isn't it like also a type of a circle? Because it's them paying OpenAI, but OpenAI orders Trainium chips and uses
Yeah,
AWS. So they're anyways going to they're going to be making money on their investment directly,
yeah,
like a
that's true.
Microsoft and
It's
Azure.
Microsoft. Yeah, it's crazy that Microsoft still gets a lot of that money, right? I mean, Microsoft revenue sharing, no matter where OpenAI is making money for inference, if they're doing inference anywhere else, whenever their APIs get called, there's a revenue sharing for Microsoft. So Microsoft is like, go ahead, go work with whoever you want. We still have revenue sharing. So if you can expand and grow the business faster, that's better for us.
Is there I always forget, is there a timeline where it ends?
The revenue sharing, I don't know. I don't know if that also happens with that AGI thing. I don't know about the revenue sharing. I know certain things are like the actual proprietary stuff is based on AGI or whatever it's called. But I don't know about the revenue sharing. I wonder if the revenue sharing is just ongoing forever.
If that's the case, yeah, then I guess I know why Microsoft is chilling right now. Robin, will there be a rubric and dlocal? I don't know about rubric, but dlocal maybe. I'll just have to ask Manuel if he wants to join. I think that's next week or something like that. So keep you posted on that one. Other than that, did you see Apple announced a new MacBook today?
No, I did not. Are people buying thousands of them to make? Oh, I saw you do something with Perplexity Computer.
Yeah.
How's that going?
Man, that thing is very cool.
That is crazy. You made me want to go spend another $200 a month now.
It's very, yeah, no, it's crazy. Like the amount of things that it does, and it's you don't need the crazy setup like with the OpenClaw people and their Mac Minis and I don't know, API keys and whatnot. It's just on the Perplexity platform, and you just say do this, do that, and it just goes and does all of these things. Like for example, I listed 13 companies. I said create like Wall Street type of DCFs. If this company doesn't have a free cash flow, look at analyst estimates. If free cash flow is calculated in another way, like a SoFi, for example, because it's a bank and there are loans and everything, take that into consideration, blah, 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 create an Excel sheet, make sure that all the formulas are working, make sure that I can edit whatever I want. Like 5 minutes later, I have a full Excel sheet with 13 DCFs, a PDF file that I can share, even created posts that I can post on X and things like that. Pretty crazy. Also the dashboards for my Pokemon portfolio with everything there is going well so far. But yeah, it's crazy. You don't need Mac Minis, for anyone wondering. You just need a Perplexity account and pay. It is quite expensive. It is quite expensive. I anyways got the Perplexity Pro already for free. Now I got the Perplexity Max for free for now because they did
Nice.
reach out to try out and post about it. So I was like, you know what, if you want me to post about it, then give it to me for free.
Yeah, for sure.
Because yeah, there's no point in me just retweeting things. Like, you want me to post, I want to use it and create stuff myself. So that's been going well. Well, how did we reach it? Apple, their new MacBook Neo.
Oh yeah, that's how we ended up in Perplexity.
Yeah.
I forgot.
So it's a
Full circle.
small MacBook, 13-inch for $600, and for students it's $499. It's not bad.
Can I just say I'm a student of life? I'm always a student.
I think you'll have to show an email address. I don't think you can say Jose at studentoflifeuniversity.com.
I'm a student of the market. Oh man.
Yeah, no, I guess it's a nice entry point for most people to get this type of a laptop. If you like, of course, the Apple ecosystem and all of it. It's small, but I think it's very practical. It's the A18 chip, so no M4 or M5. Oh, obviously not, because otherwise it would cost a little bit more.
Yeah, I mean, it's, I don't know. Interesting to see. I'm curious to see how it's going to play out on their financials. Obviously sold out, right? Like the Mac Studios. But how much stock did they really have on these stuff? And is it really going to be I haven't seen Apple stock. I'm curious if the stock is running on all this kind of like sold out on these stuff, and is the thesis matching is this kind of bullish thesis on that gonna match the actual financial results gains that are happening from these solutions here?
The thesis with Apple is the upgrade cycle going to continue every single time for now? That's the thesis with them, unless they come out with a revolutionary product that's AI powered, that's hosted by Gemini or whatever. For now, it's really upgrade cycles, iPhone upgrade cycles, and things like that will continue to push the business up. But like we've been saying, for Apple, it's, again, if they can come out with a great AI powered hardware product, that could be their new iPhone moment. And I guess if it is very successful, then I understand why they've been waiting for so long, because you want to come out with one banger of a product. But if they don't, then then you're just buying here a 30 times earnings company that grows 8-9% or so.
You know what? One image that I keep seeing a lot, and I don't know, I think it just doesn't paint the full story. It's like this capex story with Apple and all these other players. All right, it's like Apple is the smartest thing ever, not investing or following this AI hive. And I'm like, Apple doesn't have a cloud business that they're really selling to other players. Like, there's no reason for them to make this investments. I just think it's crazy when people, I don't know. It's like, understand why there's a difference between the two. It's not that Apple is not following the AI cycle. It's just they don't need that capex because they don't. For them, I think for them it just makes perfect sense to work with a player and fine tune their model with that player. They kind of create like I think right now we've seen that they're working with Gemini. Why not just create kind of like use Gemini as like the platform or kind of like the template, and then have teams to be able to fine tune it with whatever way you want to use it in your equipment or your solutions. And for them, that's extremely cheap. That's cheap. So I'm not a fan of that chart that keeps being pushed around, because I don't think it tells any real story. Do you think, what is this, Neil? I don't follow anything outside of chips.
Fed, apparently, but I'm not seeing anything so far here. I mean, he's nominated officially. Don't they have to pass like a vote in the Senate or something like that?
That's
Officially
Perplexity.
by the White House, but that's nothing new. Like the White House already said that like a month or so ago.
Boom, boom, boom.
Boom, boom, boom. Indeed.
Boom, boom, boom.
So nothing. What's been happening with SoFi? Nothing much. We touched 16.8. We're now closer to $19. Anthony Noto bought almost $1 million worth of shares. So we'll see a rebound, just like the whole market.
Are you buying here into SoFi? Have you bought anything, Neil, during this?
I already
this
bought.
dip?
Yeah, I bought last week some more of SoFi. What else did I buy? I think 2 weeks ago I didn't buy anything, but yeah, over the past couple of weeks I did increase here and there, a bit of Meta, a bit of SoFi. I think some more Nebius as well, because why not? I guess.
I love you.
Why not? What did you not buy any of your AI winners? But you only own winners actually, so.
It's a loser time for the winner. Yeah, I mean, I also yesterday I did a few semiconductor stocks. I did Coreweave, I did Astera Labs, I did Credo Technology, and I forget some other names. I did a few. I did some nice buying yesterday.
So we talked about, we covered Coreweave's earnings, then the stock crashed 18%.
All because of Tanner.
Yeah, okay. Other than Tanner being the issue. What do you think it's purely because of the huge increase in capex?
I think it's because the capex increase, but also obviously the debt story behind it. So
like the market doesn't believe that they can
it's
convert
the double whammy.
They can convert it quickly into revenue.
Yeah, like for Nebius, they saw massive growth in capex, but they don't have the nasty balance sheet that Coreweave has, right? So it's like we only have to worry about one thing, where for Coreweave you have to worry about the two things. The other thing I think is it did miss on revenue expectations, but the company did state that they're not going to be providing software and cloud revenue within the guidance, even though they expect 2026 to kind of see that. So and then margin compression story, right? Because of the heavy capex, and it takes some time to turn on the system. They talked about margins taking a hit in Q1, and eventually pick back up. Now the market is like, is that really a story, right? Because we've heard from other companies in the AI story, like Supermicro, where it's like, oh yes, margins are taking just a hit for 1 quarter or 2 quarters, and we'll pack it up. But it's been like 3 years now, and I haven't seen a tick up on those gross margins for Supermicro. So I think maybe the market could also be worried about that. It's like, we're not going to give you the benefit of the doubt. We're going to wait for you to show us that, look, margins are going to start to re-improve in the upcoming quarters. Because I think they mentioned Q1 is going to be the bottom for any margin compression, and then from there on is sequential growth.
So technically we only have to wait 3 months, because in 3 months they give us guidance for Q2. But yeah, I guess we look understandable for these types of companies, but I have a feeling that the doubting has been happening for a long, long time. Like, okay, cool, you are growing very fast, etc., etc. But what about XYZ? What about this? What about that? It's the debt and fear of neutral rates or even hikes. Realistically speaking, I'm very doubtful that rates are going to increase. The more likelier scenario is just, yes, we're going to stay, let's say, flat for longer. But as long as Coreweave has no delays, they should be fine, because they keep repeating the same thing. Look, our build out is backed by the backlog. We are not building before we know that people are committing money to these types of projects. So if there is no delay, they should not get hit.
There's the next question coming up here, Neo, from CDGN. Jose, when do you expect Coreweave to break even? They're now in the $8 billion annual run rate, and their losses keep widening. I think, I mean, they talk a little bit about it during the earnings call, Neil. It's like, obviously right now as you're building data centers, if you're going 100% larger every year in capex, that's definitely going to impact your numbers, right? They went from, I think, um, I forget how much active power they had at the beginning of the year. But just from last quarter, they went from 600 and something or 500 and something to 850. I forget the actual numbers, but it was like a 50% growth in your active power in a matter of one quarter. That's insane. Imagine if you, the easiest way is like you have two houses and you bought two houses and in one quarter you ended up buying one more house. Obviously, your mortgage and all this is going to increase like crazy. Um, Eventually there's going to be a story, and let's kind of go back to this housing story. It's like, let's say eventually you're going to have 10 houses, and when you buy one house, it's not going to make that big of a difference on your financial results anymore, because it's like you're already kind of getting the benefits of these 10 houses. So the one house, you're going to see debt, but it's not going to increase dramatically compared to what you already have. um, and the revenue is not going to impact revenue as much. Eventually, there's going to come a time where when they're growing active power, it's not going to be to those massive levels, and I think that's when you start to see a, a hit. But it's also that interest expenses is eating up their potential profits. But that's all. It seems like that's all covered in their. They thought about this, right? They know the interest that they're going to get when they build these stuff. They mentioned they build these stuff when it's they build this stuff after contracts and after these backlogs have been made. So they have to have this in plan. They know, hey, look, interest is going to be, interest is not something that is, you know, your
Delayed.
interest from the beginning. Yeah, it's right when you make contracts, you know your interest. So what I wonder, do these data center companies need to give you a report for each data center and say, look, this is on target to the model we projected. It's worse, it's better. Is this going to eliminate a lot of the fears? But yeah, um, I don't know. I think it's Coreweave is one that's going extremely aggressive, extremely aggressive. I think Nebius is being aggressive too, but I think Nebius is being aggressive with what looks to be responsible aggressive. I think CoreWeave is just aggressively aggressive. And I think in this AI infrastructure market, I like aggressively aggressive. But it's not for everybody. And maybe that's why Nebius seems to get a little bit more love. I think they're aggressive, but a little bit more responsible with it. But yeah, I think we're still in early innings in the AI infrastructure space.
I mean, he has a point, but like you said, it's a point that CoreWeave knows about and has been raised already. Like the point of, yes, interest expense is eating the profits today. I mean, the profits, there are no profits today, but it's eating that today, and it's going to still eat it in the near future as well, which is why we keep saying, yes, the big problem with CoreWeave and even an Oracle, actually especially Oracle, is, yeah, if you have delays, you are screwed because your interest payments cannot be delayed. They're going to be there no matter what. And that was the problem. The problem 3 months ago was that there is a delay, and the market was fearful that, okay, they won't have the money to pay it, the interest is going to come, and the revenue recognition is not going to be there on time. That's why I keep saying, if there are no delays and they are on time, maybe ahead of time, they should be covered. Then when will they be break even? I cannot tell you exactly where the break even point is right now, because we're talking about a super fast growing company with even today still moving pieces on a monthly basis or so. But if you go and look at the adjusted ones, the margins are already positive today. But I guess I understand that you want to see pure profits. I would assume 12 months from now, we could potentially see signs already from it. I would say early 2027. But then again, I'm just speculating.
And they mentioned, I mean, just improvements on financials on their interest has improved just based in the last 12 months. I think they saw a 300 basis point improvement, which I think they mentioned was like a $700 million to $800 million annual saving. I mean,
Yeah.
that's exciting. And they gave a comment that they expect it to get better the next 12 months as well. So again, they give, this is such a new company in forms of public eyes that I don't it's like in a company, you trust leadership, and it's like they give you goals, you have to follow through with them, and then that eventually breaks the goals. People say that like they don't like Coreweave management, but for me, I haven't gotten anything that has shown me that they're not doing what they said they were going to do. Right? I haven't gotten that distrust from them just yet. Um, but yeah, someone was wondering, did you buy any software stocks recently? Weird. Did you click it before I even said it? I don't think I have.
Because I knew what were. I mean, I wanted to point it out, but did I buy any? Like the Salesforce, ServiceNow, Adobe type of names? No, I purely bought what I already owned, and that's about it. Because I know, and we've talked about this before, it's cheap. Software names are cheap. We know this, right? It's a known thing already in the market. But when we have such, let's say, volatile pullbacks, especially in the tech sector, because in other sectors there hasn't been any pullback, let's be honest. In the tech and AI sector, yes. I rather just focus on what I own and maybe even consolidate.
Wait,
if
no
I
one else
really
is in
want
the
it.
red, Neil, except techs and software?
I mean, those that bought Chevron, Caterpillar, and Costco and Walmart are making millions already year to date. So, no, only tech, software, and AI is down because we're going back to the dark ages. No, I mean, I'm joking, but yes, there is definitely some good reasoning behind going into more, let's say, safer non-AI stuff at the moment. And again, as long as people make money, I couldn't care less what's happening. But software-wise, I wouldn't mind owning. The thing is, if I have to own it, then something else has to go out of the portfolio, or it's just going to be a position that's not worth that much in the portfolio. And so what's the point of me buying it? Like me buying it just for the sake of buying it. And then I can make the case as to, okay, I'm buying Nebius, it might also be a software name. I'm buying Meta, might also be a software name. So I just rather buy those names that I already own, and I think should be fine. So you didn't buy anything other than of course, the AI semiconductor names we talked about.
I don't think I bought anything outside of that that I can recall right now. But one more final thing. Thoughts? We were talking about Perplexity and Coreweave, Neo. Any thoughts on kind of that Perplexity and Coreweave announcement today?
I didn't see anything.
Oh, you didn't see it? So Perplexity announced that they were going to be they're renting out. They made a contract, a multi-year contract with Coreweave, for GPU for AI infrastructure, pretty much.
Really?
Yeah. So that I wonder if that's like one of the reasons. Let me send it to you, link. Come on, Neil.
Sorry, it's a nice day here today, so I was in the sun a little bit before, but yeah. I'm seeing it. I'm pulling it up.
All right, yeah. So it was no number. I don't know if no number given, but it's just the thoughts of it.
Who is powering Perplexity's AI inference workloads today? Yeah, you are lagging a little bit. I didn't know if it was my problem or.
Yeah, I don't know who's using it's a Google Cloud. Imagine.
Okay, interesting. Okay, pretty cool. You know, I'm still.
In January of 2026, Perplexity, so just a few days, Perplexity signs a $750 million cloud agreement with Microsoft. And it says in the past they signed with AWS. This is the first cloud agreement Perplexity has signed outside of Amazon, which it has long-term partnerships. How much demand are they seeing that they have AWS, they have Microsoft, and now they're going with Coreweave?
I guess the Perplexity computer is taking quite a lot of compute, but I'm very surprised that nobody bid for Perplexity, like Apple, for example, to buy it completely. Or even Samsung, because I think Perplexity is on Samsung by default now on the new ones, if I've seen it correct, which is a huge win for them, which I guess explains why they need AWS and Azure. Let's see, Perplexity. Maybe, I don't know.
Is my mic still bad or is it better?
Now it's better.
I wonder, do any of those banks own Perplexity? Like, have they made any of the funding?
I don't know. I don't know. Okay, so
I guess Nvidia might.
Maybe. So yeah, Perplexity is pre-installed and is the system-level AI agent for the Samsung Galaxy S26, which is a pretty big win. Are you asking Gemini?
Yeah, Nvidia is a major investor since 2023. SoftBank, Jeff Bezos through his personal investment. Let's see, non-equity, but key strategic are Amazon, while not direct corporate. AWS provides the cloud infrastructure powering Perplexity. That's it. So it doesn't seem like from at least from Gemini that only Nvidia is the only one that has a nice position there, and SoftBank.
Are you surprised that nobody has put in a bid to buy it, or buy at least 50% of it, or something like Meta or Amazon or Apple or Samsung or something like that?
I'm shocked. Yeah, I would say so. Because they've actually in the past month, I feel like they've done some pretty cool things. First, the Perplexity computer, I thought is pretty based on just the examples. I haven't tested out, but then they also have this other thing in Perplexity where it's kind of like let me see what they call it. They don't. It's
the fact that they have the multiple models, and to me that's already a huge win.
Yeah,
that they choose whatever model is best for your specific query, and the fact that you can choose which model you want to use if you like one specific model.
I don't see it anymore, but model console, that's one I liked a lot. I've heard about it. So it's their model console is like when you do, it's only available for their Max feature, but when you ask a question, it does like deep research. But then it like when it's doing the deep research, it's like consulting with other models to make sure what you're researching is like the good thing. So it's like it could be first using OpenAI to research something, and then like Gemini or something else are looking at what you're researching and saying maybe you should start looking at something else. So it ends up giving like a better answer in the long term of things. But it's like putting all these AI models together to answer that final results.
Yeah, it's a good platform. That's the thing. It's a good platform, and I do think that if someone with the distribution like a Meta or Apple buys it, they can monetize the hell out of it. Because if we're being honest, Meta AI is pretty useless. Have you met someone that's used it?
No, just my parents probably.
Yeah, by mistake.
Yeah.
That's the thing. I think what they've built is one of the most user-friendly, useful AI products out there today. Because it's one, a search engine, and two, the AI chatbot that they have. It's just that I'm afraid they're not getting the distribution necessary, like the Claude or ChatGPT.
I wonder why no one has really gone out and tried to purchase it. Is it the thing? Is it like them thinking, oh, maybe we can actually build something like this on our own and it's cheap? I wonder what.
Maybe, but then again, that didn't stop Meta from buying every AI supermarket around the corner. So,
but like, I guess like, what would they benefit too, right? If I'm guessing a lot of these players could just probably use like Perplexity API. It's like, I guess with other things, you're also might be getting like a hardware push, or something else. It's like here you're pretty much. I find it interesting that you don't have. I understand why Google wouldn't. I don't
Yeah.
know, maybe, but like why wouldn't Microsoft want to? Or does OpenAI say you can't invest in? No, you can't, because OpenAI, Microsoft just invested in Anthropic, right?
Because they probably want Copilot to be useful, but then again, other than the forced enterprises that have to use Microsoft Teams and Copilot, again, I don't know who's using that, but to me, top of my mind, it's Meta and Apple. I think they could make Perplexity reach, of course, billions of users, especially Meta, because then Meta, they could turn this thing into a real search type of competitor if they integrate it with, I don't know, Instagram, WhatsApp, whatever you want. And even Apple with Safari and things like that. There is potential. There is a lot of potential there. And hello to all the Amit refugees. Welcome. Apparently,
welcome.
Apparently, he's not streaming the market close today, so there is an opportunity.
I mean, if you want to, I guess maybe you let me know, Neil.
Yeah, I'll let you know if I'm here, because
I don't want to do any earnings call, but
yeah, no, we'll see. We'll see. Any idea what Robinhood is going? I guess that's where Amit is going.
Oh, that's where it's going. Okay,
probably. I was wondering if he was going to go to the event or not. It's like this whole Robinhood event thing, like it's teasing something that has to do with an airport, but I'm like, what the heck is this? Whether they're going to launch a Robinhood lounge or I don't know. We'll see. I don't know what they can launch, but when is this thing happening? Let's see, Robinhood.
Hey, things are gotten somewhat greener. I'm happy.
Who?
I'm happy. Greener. Like Micron over 400.
Yeah.
AMD almost at 200. You know, have we talked about? Do you like the breakdown that they're doing, Neil, here with AMD and the Meta stuff?
AMD, well, first Meta, go ahead. And OpenAI.
Yeah. First, go ahead. Do your hood talk. Talk about your fintechs.
No, the hood talk. It's tonight. Well, tonight, 7:30 p.m. Eastern. Okay, so very late, I guess. It's like take flight. That's their thing. So I don't understand what the heck is going on here. But okay, we'll see. I guess they're also going to announce maybe some new products and whatever. But yeah, the Meta AMD and OpenAI AMD. I mean, you usually never like, right, to give away shares. But in this case, and the same with OpenAI, it's like, if they are going to give away shares, that means AMD is worth a hell of a lot more in the future than what it is today, because it is performance-based. And so I don't mind if Meta gets a piece of AMD, if AMD is worth $1 trillion in the future. Same with OpenAI. Because again, these companies have to order from AMD in order for that to happen. And people were already scared, right? Because 2 weeks ago, Meta announced an extended partnership, right, with Nvidia, and people were already saying, "Oh, they left AMD, blah blah blah," and I was like, "No, they didn't." and a week later, bam, the agreement and announcement with AMD is there. But of course, Nvidia being Nvidia, they don't have to give one share to these types of companies. But again, is this a problem to me as an AMD shareholder? No, because if AMD wants to compete and this is the way for them to compete, okay, so be it.
Lisa has mentioned, right, that these are deals that are help both ends, right? It forces the customer not to just buy the chips, but help develop it. And they mentioned, right, the reason they went with OpenAI and Meta is because of their strength in AI models as well, and their AI workloads, right? They have a lot of workloads, and they're going to be the ones that are driving all this capex. So it's like, it helps them, it puts them in the front seat of where AI models or AI workloads are going to go in the future, which can help them make more competitive products. So they mentioned it's not gonna, this type of deal is not something that happens with every player, every big player. For example, it didn't happen with Oracle because Oracle doesn't bring anything to the table outside of just buying chips.
They don't have money.
And that, um, curious, would you? There's only a selected few of other companies that they can do this with, in my opinion. Anthropic and XAI are probably the only other two I can see this happening to, especially XAI, which goes to a lot of the events. I feel like that is the one company that I've seen at every NVIDIA, AMD AI event. How many more times would you be upset that they do this? Could they do this one more time and you'd be upset? Or is two the max? Is three the max? Is four the max?
The
For the whole
OpenAI one is
company?
10%, right?
Mhm.
But only 10% if AMD is worth $1 trillion.
Yeah.
How much was Meta?
I think Meta's the same.
Meta is the same.
Mhm.
Um,
I wonder if it's 10% counting the dilution of the other one, though. Would
I
you be
guess
upset if they do it one more time?
it depends with who.
XAI, let's say 10% with Anthropic.
I honestly, I don't mind if this means like tens of billions of dollars in revenue coming in. I don't mind, because eventually $600 per share is $600 per share for me. It's a 3x.
At the conference, Lisa Su literally said it's with the Meta deal, it's a 6-figure. It's not 6-figure. It's a 3.
I hope it's not 6 figures.
Not 6 figures. It's I forget how they said it, but it was like hundreds of billions. Not it wasn't 3-figure billions of dollars is what they said. 3-figure billions of dollars. So it's not. It's like it's north of hundreds of billions with this deal with Meta. That's what she said at the conference yesterday.
Yeah, I forgot we have many conferences happening right now. My problem, you know what the problem is going to be, is that we're still not going to get the clear double-digit growth, tens of billions of dollars opportunity actual number after all of these deals. That's my biggest problem. But I guess we'll have to wait, because the MI400 series launches second half, right? We're going to see that probably hit Q4 earnings report a lot, and then 2027.
She mentioned in the conferences a little bit in Q3, a lot in Q4.
Yeah. So that's the thing. People need to be patient. I released an AMD video actually earlier today and did a quick DCF, which like very, very simple. And for it to be worth over 90% of where we are right now, it's not that crazy. They need to hit their 25% free cash flow margin, which they said it's going to happen in the next 3 to 5 years. They need to grow this year. That's the bull case. They need to grow this year, I think 35%, or maybe now a bit more than that. Next year, even higher, because of the ramp up of the MI400 series. And then after that, growth does moderate, and it's not that crazy to think that AMD can be a $400 or close to $400 stock in 2027. People want it this year, but even in 2027, I think it's a pretty good performance. Do we need another 10% to give away for, I don't know. Because if it's not the same deal, it's even more in revenue, although can Anthropic give more? Probably not. But the incentives are aligned in those deals, at least that. It's like if everybody wins, then everybody wins. It's not like, only one side is going to win or the other side is going to win, and we are losers here. No, it's if we get paid, everybody gets paid, which is fine. Which is fine.
There's this question that came out from Eddie Neil about 1158. Lisa should say, I'll do this deal one last time and make Microsoft and Amazon fight for the deal. But I wouldn't think they would do the same deal with Microsoft or Amazon, right? I think it's the only ones to do the deal with Eddie is an AI lab. With Microsoft, they pretty much did it with OpenAI. So by I think by proxy, OpenAI is Microsoft is going to end up buying MI450s, and with Amazon, I think if it was to do it, it would most likely be via an Anthropic deal. And they talked about it a lot, Neil, where they mentioned is the good thing is about making these customers or these these partnerships with these AI labs is these AI labs are the ones that are going to these other cloud service providers looking for compute. And if they go to the reason Amazon and Google don't have the MI 300s or whatever is they don't see that demand for it. So there's no point for them to do it. But if a big customer says, look, we'll get your NVIDIA GPUs, um, we'll rent out your Trainium or your TPUs, but I also have some workloads that are extremely well on AMD GPUs. Can you also build up some infrastructure for me on that? I think that it opens the door. It's not a guarantee that Amazon or Google would do it, but it does open up the door for OpenAI or whoever might be hosting Llama's models to say, look, if we can do a little bit more with the GPU solutions as well.
Plus, it expands the AMD ecosystem. A forced expansion, but a necessary one, I guess. Arnie isn't here, but I'll play Arnie in this case. What's a price target for Nvidia by the end of 2026? Well, like I've said before, it's been 7 months and that thing hasn't moved. Would it be too crazy to say that we end the year at 250?
Yeah, not crazy. I would say around 252.
What is it right now? 180. Well, it's crazy. 182.
Wow. It seems crazy, but then, I mean, I think just multiple expansion, right? Well, what are you trading at? A forward PE ratio of 21, 22
24.
right now. 20, is it 24 right now?
Yeah, 24.
Can we pull up fiscal.ai? Pull it up, Neo. It's not 24. Is it 24 already?
What do you mean already? It's not Meta trading at 21. It's still Nvidia.
And I see some people asking about Supermicro. I think Supermicro announced a deal that they were, or somebody's building data centers, and Supermicro got part of that, part of the deal. I think that's one of the reasons it's up. Then just the overall market is also up as well. 24. All right, but let's say
interesting.
Neo has become so many different YouTubers throughout the years. Throughout this year, right? Was it the Mid calling you Jose?
Meet was calling me Jose. Tanner called me Roy last week. I am a shapeshifter. 24 times earnings. Could this thing
average
be trading
is 32? The median, not even the average, right? So the median, which eliminates a lot of the noise, so is 32. So that's 2.4, 4.8, 7.2. So it could still grow another 30% on just price to get back to its overall median. So what's 30% up from here? That's 18, 36, 54. So 182 plus 54, 236. I don't know.
Something
my math is bad like that. So just on multiple expansions to go back to the median, it takes it to 236 or so. Then you add in the upcoming quarters, you're going to see guidance improve. You're going to see better numbers that I can't see. 250 isn't crazy.
I mean, the average analyst price target sits at 264 right now. So
damn it.
250. It's not crazy. It's not crazy. A little bit of market momentum, continued execution from Nvidia, which I think it's quite easy to get. And yeah, this thing first of all should be already over $200, and then the thing here, the only issue I can come up with is the fact that it's worth $4.4 trillion.
Yeah.
So to add 30% to that is quite
crazy.
a lot.
Yeah.
Quite a lot to add in market value. Like you add, I don't know, 10 of the most popular software names in market cap just like that.
But I mean, just to put it, so a 30% growth on just market, on just kind of regoing from the market, that would be a $1.2 trillion addition just on this, right? Just on that. That seems crazy. But then just to think about it, Google during the concept was a $2 trillion company, and now it's sitting at $4 trillion company, $2 trillion in last year, when this whole AI story was pushing it. So it added $2 trillion in market cap in in a year. Someone paved the way already for it to be possible. It's what I'm saying.
I mean, Nvidia did it also in 2 years. It added $4 trillion in market cap. I mean,
Yeah.
three,
But
four.
Yeah, I feel like that addition was through just new revenue streams, right? I think Google just showed it that just from purely multiple expansion is possible.
Yeah. Google, I thought this would be higher. It's 26.2 times 4 PE. Wasn't it like 30?
That's why I'm saying go to the charts instead. Go to the charts instead. Not
Although
that
we
charts.
are down 11%.
We
so
are
I guess,
down. Yeah, yes. Let me see. I'm gonna use my Fiscal.ai because yours is broken. Let me go to Nvidia. Let me go to,
let's see,
financials.
Forward valuation.
Forward PE. Yeah, see, so when I go to Nvidia right now, if I go at the charts, forward PE ratio, I'm getting 22.
What, in this one right here?
I don't know where let me see. Yeah.
Where did you click on the ratio in the financials?
Yeah. For valuation. See, for
this is Google. Wait.
No, that's the Nvidia. Are you Nvidia right now?
I am now on Nvidia. Let it load. I have used it too much. Yeah, so see here it tells me 22.1 because it does on an annual. This.
But for them, where we're at right now, their annual should also be the next 12 months.
Yeah, that's interesting.
Yeah, so 23.17. See, whichever one you want to look at it.
So we have to send a message to Ryan and say that the front page is not updated.
See.
What's crazy is that no, because it's January 26 is 23, and then next 12 months is 22.11, and so this technically should be on the front page.
Yeah. Yes.
Hey, where did it go?
So 22. That's where we're at. I don't even know where it's getting that 28 or 27. What was it giving you?
24.
Yeah.
Oh. Crazy. 17 times 28. Interesting. What tool do we use? Fiscal.ai. If you use one of our links, you'll get 15% off.
Yeah, depends where you're at. What channel are you in? Use that person's.
Mine.
No, lame. Never mind. Use mine. We got a question here. Someone asked about Coherent and if you guys would buy it or how to buy price, would you have a buy price of 259, but I would love to hear your thoughts. Coherent, I mean, we saw the investments, Neil. Would you purchase any of these optics names right now? I personally wouldn't. I'm not that knowledgeable in that space.
No, the answer is no. The answer is no. But if you own Nvidia, shouldn't care because they invested for you. Yeah. So that's about it. Yeah. So yeah, it is 22 times 17 based on the EPS that we're getting here. So I guess it's either getting confused.
And what is Google actual? What was Google's actual thingy?
Now the Google was quite correct.
I wonder if it's just because they have a different fiscal year than calendar year and it's messing things up.
Yeah, but then if we do, what is it, 4.93, then it's 37. So that doesn't even make any sense. Let's see if this makes sense. 13, 658. Okay, so no, even that doesn't make, like I tried to maybe take the 493 plus 824 and then divide by 2, but that gives me like a P, 4P of 27. So that's not it either. So for some strange reason, that number pops out of nowhere.
Oh.
Like I don't know.
Yeah.
26 times. 24 times, sorry.
Yeah. Weird.
Very strange.
Very
Yeah.
strange. But 22. I mean, what is Meta trading at? Is it really the cheapest
I
one?
was
Oh
just
my
about
God.
to go. 21.7 based on the front page. What about the back pages? The back pages will tell us. Dum dum dum.
Zone. Hurry up, Theo. You should put it as a metric. They had a metric templates. Just put 4P ratios so
Like
you never have to like.
I mean, I usually have it here in the charting, like the whole list. I don't know why I went here, but
22.
22, yeah, 22.1.
How
And
is
here-
Nvidia
and here the
trading at
ending-
this levels too?
Yeah. And here's 22.1 and 21.8. So yes, something is wrong on the front page. Like not by far, but
Yeah.
the numbers don't match.
Yeah.
But Meta is also very cheap. What did someone say? SMCI is up a lot?
Yeah, I think it's
7%.
I did see a deal. But I think it's also maybe just this overall AI excitement.
Yeah.
We have a question here, Neil McCord 94. The numbers aren't numbering. Yes, D sharp. I agree.
Which one?
Oh, that one. No, I don't know. Something about they can't go capex because they'll go to negative.
This? It's hard
Yeah.
to believe Hyperscale will continue issuing capex at this rate, honestly.
Maybe not at this
Correct.
rate. I don't think at this rate will continue. Even on both percentage wise and dollar wise, on both ends, I don't think you'll see
Yeah.
it. I don't think next year we're going to go from Meta went from 95 this past. I mean, Google went from, they said originally 80 billion that they were going to spend or so. They actually ended up spending 92 billion, and now they're projecting 180. Right. So, or I forget what the actual number, but almost massive growth.
Almost a double, yeah.
Yeah. So I don't think we're going to see a 100% growth on capex from these big players either. Or I wouldn't expect like $100 billion jump either. A $20 billion jump another year? Not that crazy. Now, how does the market think about that? Right? I wouldn't be surprised some of these going negative free cash flow. I mean, I've seen so many videos of, Amazon's doing it already. But I mean, the way Mark Zuckerberg talks about it too is like, this guy's just willing to throw all the money if he could. Obviously, the constraints on chip, on land, on everything is protecting them to not do it. But if they had unlimited land, unlimited power, unlimited chips, I think all these companies right now would have just gone near negative free cash flow.
I mean, the difference, of course, with the Meta and an Amazon is that Meta still has high free cash flow margins compared to an Amazon. Amazon never has super high free cash flow margins, so they're always like they will always have to be. I think the peak is 8.8% over the past couple of years, and now we're already over the last 12 months 1.1%. And Meta has the luxury. Same with Google Alphabet, they have the luxury to do these types of things. Also, when the core business is actually growing faster. I mean, Google is spending a lot of money, but then again, that means that Google Cloud is accelerating, which means that they can become an even more profitable business. And so for Google, free cash flow margin can stay relatively stable-ish. But let's say, like we said, 2027 is the year CapEx does peak. I guess it's a good thing for these companies because that means that suddenly they're going to spend less and they're going to keep more in-house, which again, the market would or should like it. But yeah, in the short term of the next 12 months, I think we're all expecting margins to get hit across the board. That has already been happening actually for all of these big tech companies. Do I think there will be another massive deal for Nebius this year? I wouldn't be surprised if we actually see another Meta deal for them. Because we knew that the Meta deal could have been much bigger if they just had more to offer. Yesterday, they got approval to build the 1.2 gigawatts data center. So
sorry, I think I forgot where.
yeah, Independence, Missouri, I think, something like that. So I wouldn't be surprised. Is it going to be a Microsoft type of deal, 17, 19 billion dollars? Maybe not, but I wouldn't be surprised if we see a second Meta one, or maybe another AI lab one. But
And,
yeah,
and remember, a lot of these deals for the people is like the reason most deals haven't come out is just because capacity is being built up. It's like if they mentioned they were sold out. If you're sold out, you can't announce any new deals. But they did. I forget what was their active power numbers for this year, but it's definitely going to grow dramatically. And with those, as those data centers come on, those deals are also going to be announced with it.
that's not what I said. I said if you don't understand the company, just keep your Nvidia because they own it. If you do understand Cohere or whatever, then okay, go ahead. I don't. Jose said he's not that interested in it either, so he has exposure through Nvidia, and we don't have to think too much about it. But clearly, Light has been lighting.
Yeah, Light has been killing it. Simon made a lot of money on this one. But yeah, I mean, it's with these ones, it's like obviously the smaller players, if you hold them individually, they will benefit dramatically compared to, like you mentioned, right? The $4.7 trillion company can only grow so much, and these other players can grow a lot more.
Yeah, and here the Max 7 as a group currently trades at a forward PE of about 28.3 based on recent. I mean, I think Joseph Carson talked about it, and he, like, if you excluded Tesla from it, because Tesla is the only one with like super high PE, the PE of the rest is even lower. So every time people say, oh, look, Schiller PE is at record levels, dot-com bubble, blah, 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 blah. If you look at the biggest companies on the planet, the most profitable ones, their PEs are almost half of what a Walmart or a Costco are today. It's not to say that Walmart and Costco are bad companies. Jose, I went to Costco when I was
Loved it
in Miami. It was a nice experience. Crazy thing,
you could buy a couch go in there,
Costco.
You're like, I get it.
No, I mean, one of the first thing I saw there was a couch. You can buy a couch in Costco. I was like, what is this, IKEA? But yeah, Max 7, if you exclude, of course, Tesla, it's fairly cheap for a high quality business.
Yeah, I mean, even Microsoft. At Microsoft, it's crazy. Most of these are trading in the low 20s right now.
Yeah, I mean, even if it's mid 20s.
Yeah, mid 20s is crazy. I mean, a lot of these were, yeah. I mean, mid 20s is all right. I mid 20s, low 20s is whoa. It's like that meme. It's like mid 20s, and then.
But yeah, are we out of the woods just yet? Probably not. There's some macro geopolitical hits that can happen here in the market, but it seems like the markets. I mean, on Sunday, I've read a lot of people say, "Oh, Monday is going to be the worst day in the stock market ever," and then turns out that Monday was just another day in the market, and today.
Yeah, it wasn't that scary, right? I mean, obviously, outside of international, the stock market itself, I thought it was going to be, especially when you're hearing all these things about like South Korea and their market.
Yeah. But then again, their market has gone up like crazy over the past couple of months. So it's a correction there. I'm not that surprised. But then again, they do what? It's down 15% in 2 days or so. Which is a heavy overreaction, but then again, it's like taking the Band-Aid off at once. So it hurts like for a day, but at least you're now maybe back to a bit more of a normal type of level. We've said it time and time again. We look at some quality businesses here. They're not trading at crazy valuations. Yes, we didn't have a 2022 type of correction either, far from it. Like the markets are not down 33%, but a lot of these names are down 33%.
Like Coreweave, I think is.
Yeah. So, I mean, that's the thing. Names, it's like a new normal thing that a stock can go down 18% the day after the earnings report or go up 18%.
Yeah.
I don't remember that happening before. But it gives you a very, very quick reset on valuation. It's not great because that means that if you're heavy in these types of positions, your portfolio takes a huge hit in just one day. But then again, I prefer this than a slow bleed of like 6 months of continuous red. I'd rather have like 2-3 days of red, like the DeepSeek one or the tariff drama last year. I was like, you know what? Make me lose 40% in one day in one position, but then let's start talking business. Like Nebius was down 40% last year in one DeepSeek day, which is crazy to think about it. But yeah. Anything else, Jose?
No, I think I'm good for the day.
Maybe I thought he said, why buy optics plays when you can buy? No. It's not what I said. I said, why buy it if you don't understand it, if you can just have the Nvidia and they deal with the investments. So that's it. Okay. That's about it for us, I guess. We might or might not show up later today for
Market close.
For market close and Broadcom, because it seems like a lot of people are asking for it. Maybe I'll close out. Do I want to talk about Meli? I think Meli is also one of those no-brainers in the markets. That's all I have to say. If you own Meli, what was it, under 1700 it went, now it's still under 1800. It's still a no-brainer company to own in the portfolio. I'm very happy to have it in the retirement one. Could probably increase it by quite a lot this week, but we'll see. Anyways, with that said, this was out of the blue stream with the previous breakfast show bros. Thank you all for joining, and we shall see each other maybe later today or maybe another day, but who knows, maybe later today.